Modern legal practice systematically integrates investment analysis, using metrics like NPV, IRR, and ROI, across complex scenarios in M&A, litigation, regulatory compliance, and sector-specific transactions. This approach enables lawyers to quantify risk, structure deals, and drive favorable outcomes for clients in highly regulated and dynamic industries. How investment analysis is integrated in complex legal scenarios. Legal professionals now routinely apply advanced investment analysis, such as net present value, NPV, internal rate of return, IRR, return on investment, ROI, and scenario modeling, to inform decision-making in mergers and acquisitions, litigation, regulatory compliance, and sector-specific deals. These metrics are not just financial tools. They are embedded in legal due diligence, contract structuring, risk assessment, and dispute resolution. By combining quantitative analysis with legal expertise, lawyers can better evaluate deal value, anticipate risks, and negotiate terms that protect client interests across sectors like technology, healthcare, and financial services. Real-world legal case applications, 2020 to 2025. Between 2020 and 2025, legal teams in diverse sectors, including employee benefits, manufacturing, real estate, technology, and engineering, leveraged investment metrics like ROI, NPV, IRR, and payback period to support case strategies. These metrics were crucial in analyzing excessive fees, quantifying damages, demonstrating deal value, and conducting due diligence. Their use directly influenced settlements, regulatory approvals, and successful transaction outcomes. U.S. Bancorp 401k class action, 2025 ROI and NPV were used to analyze excessive fees, leading to a $250,000 settlement. Hayward Holdings security settlement, 2025 NPV and IRR quantified damages from inventory/demand issues, resulting in a $20 million settlement. Brookfield/GIC buyout of National Storage REIT, 2025 NPV and IRR analysis supported regulatory approval for a $2.6 billion real estate deal. Leidos acquisition of Entrust Solutions, 2025 NPV, IRR, and payback period guided due diligence in a $2.4 billion acquisition. Applying financial metrics to legal cases and transactions ensures decisions are data-driven and outcomes are optimized. B. Sector-specific integration. 1. Technology sector. M&A and VC deals. Legal teams use DCF, NPV, and IRR to assess acquisition targets, structure term sheets, and negotiate investor protections, e.g., anti-dilution, liquidation preferences. IP valuation. Lawyers validate DCF-based IP valuations, ensuring contract terms reflect the true economic value of patents and software assets. Example: in a 2025 late-stage VC deal, legal counsel balanced IRR/NPV projections with founder incentives and investor rights, adapting deal terms to shifting market valuations. 2. Healthcare and financial services. Pharma M&A. Legal due diligence includes RNPV modeling for clinical trial assets, adjusting for regulatory approval probabilities and potential litigation. Banking compliance. Lawyers use RERIC and stress testing to demonstrate regulatory capital adequacy and inform M&A due diligence. Example: in a 2024 cross-border bank acquisition, legal teams modeled the impact of AML compliance costs and regulatory fines, structuring escrow and price adjustments tied to investigation outcomes. Legal professionals increasingly use advanced quantitative tools to enhance decision-making. Monte Carlo simulations help quantify litigation risk and settlement values by modeling thousands of possible outcomes, often using platforms like Excel with at-risk or Crystal Ball. Scenario analysis enables lawyers to stress-test contract terms and regulatory impacts, supporting robust negotiations and compliance. Risk-adjusted NPV/IRR methodologies refine asset valuations and deal structuring by incorporating legal risks, making financial projections more realistic for legal contexts.